It's still obviously a horse race with this many weeks to go. And with Trump, we get what we've already seen, which is perhaps sometimes on again, off again trade issues between Canada and the US that are some concern. With Biden, he doesn't have a specific Canada platform. In fact, the Democratic platform barely mentions Canada, but there are a few items on the Biden and Democratic agenda that are important to note. One is that they intend to raise taxes on business, that is corporate income taxes. And the issue for Canada is, while that might initially attract some capital spending here, it also could set a backdrop for Canadian governments to be tempted to raise corporate taxes. So we'll certainly have to watch for that and its stock market implications. The Biden administration would also, if elected, be tougher on the issue of climate change. The plus is that will put US energy companies on a more level platform with Canada's energy sector. But at the same time, it again poses some risks for Canadian investors. Biden has spoken out against the Keystone Pipeline, which would help carry more Canadian oil more effectively to US refiners. That's certainly an issue. And if the US is getting tougher on climate change, it certainly means that they'll be eyeing their neighbors here in Canada to make sure that we're living up to our commitments. So perhaps a plus for green energy and other environmentally friendly companies, but also a challenge to Canada to make sure we're living up to our share of the bargain in meeting the commitments that Canada has made. And again, for both countries, then that would imply a somewhat tighter regulatory environment that will be a plus and a minus, depending on what sector a specific company happens to fall into. One of the risks that we're facing right now in terms of progress in the US is that the current fiscal stimulus has run out in the US. Congress is still haggling over what kind of additional package they could provide to make sure that those who are unemployed, and remember, there's still a lot of those people, continue to have some spending power in the US economy. Remember that for Canadian investors, growth in the US economy is key, whether or not you're investing in US equities or even in Canadian companies where the US is a major export market. If a new stimulus package is really short term or is delayed until after the election, then the key will be really getting a White House and a Congress that can work together post-election to pass that additional stimulus leg to ensure that we don't see a dramatic slowing in consumer spending or consumer confidence south of our border. One other thing to watch for in this particular election is because so many Americans are expected to vote by mail, and the counting of those mail-in ballots could well come after the actual election day. We're going to face potentially days and days where we simply don't know who is the new president of the United States. We experienced that when we had Bush running against Gore, and it could get even worse and more litigious this time. Equity markets, one thing they don't like is a lot of uncertainty. They'll be happier when a winner is declared. So we do expect to see a fair bit of market volatility around that election day and potentially a week or two after election day while we battle it out, even potentially in the courts, to find out who's the next president of the United States.